The internal control system is a system of management in the organization which has or takes control over all the operations that are happening in the organization. The basic purpose of internal control, particularly in auditing, is that it helps for the reliability of financial reporting. So basically there are three main controlling techniques or the methods that are used by the management. One is preventive control, detective control and corrective controls. Hello everyone, I am Nikilavati S, Faculty of Commerce, Vidhyaashram First Grade College, the Temple of Excellence, Mysuru. I welcome you all for the session 2 of the subject Principles and Practice of Auditing. So we are discussing in the second chapter, that is Risk Assessment and Internal Control. In today's session, let us discuss what is internal control is all about. As we all know, controlling is one of the crucial functions of management in every business organization. So, controlling is such function where the managers use various methods and tools to ensure whether all the actual performance or the operations in the business is as per the set plan or not. So here the internal control system is a system of management in the organization which has or takes control over all the operations that are happening in the organization. So why internal control is needed in auditing? So now let us understand why internal control is needed in auditing by knowing what is internal control and why it plays an important role for the or it helps for the auditors. So, internal control is a crucial aspect of any organization because it is one of the crucial function of management, ensuring that its operations run smoothly and efficiently while safeguarding its assets. So, a proper controlling system in the organization helps to ensure that the operations of the business run smoothly and efficiently. And also, it helps for safeguarding the assets of the business. It is a system or a process which is designed to provide reasonable assurance regarding the achievement of objectives in the areas of operational effectiveness and efficiency. So, it gives a assurance to the company's management that it is designed for the achievement of objectives and all the operations are in line with the achievement of the objectives, as well as reliable financial reporting and compliance with rules and regulations. So it not only gives assurance regarding the operations that which is done efficiently or effectively, but it is also important in order to ensure proper financial reporting and the compliance of the organization and its operations with the rules and regulations or laws of the land. So in every business setting, internal control system acts as a safeguard in order to prevent errors and frauds that may occur. So internal control is basically they are the policies and procedures put in by the management to ensure that all the operations are running effectively and efficiently. But why it is important in auditing? Because internal control also contains the procedures and policies that are put in place by the organization's management to ensure that the financial reporting is done properly. Now, let us know the objectives of internal control in auditing. So, the basic purpose of internal control, particularly in auditing, is that it helps for the reliability of financial reporting. The internal control system helps for the reliability of financial reporting. That means when the financial report are to be called reliable, when they are accurate and proper. So without any material misstatements, or when we have or when we can rely on the financial reports or on the the values that are shown in the financial reports, then we can say that we can rely on that particular information. Internal control helps to ensure that all the values or the financial reporting is accurate and proper, and also it helps for the stakeholders to take decisions based on this reliable information. Next we have is compliance with laws and regulations. So internal control system in an organization helps to ensure the compliance, or that the company is in line with the rules and regulations and particular company laws, the internal policies, as well as corporate governance, etc. By ensuring compliance with the rules and regulations, this internal control system also helps for the company to gain reputation, as it can avoid any kind of legal penalties. It helps to safeguard the assets, as a proper or a strong internal control system in the organization ensures that if the internal control system in the organization is strong, there are no scope for frauds and errors to happen. So by this way, by setting a proper controlling techniques, the management which is handling the internal control system in the organization, it may helps to ensure and safeguard the assets of the company. So this helps to ensure that the organization's assets are protected from theft, loss, or any kind of misuse. So assets may include both tangible and intangible assets. Like intangible assets, it may be cash or inventory, whereas in intangible assets, it might be the intellectual property, etc. Internal control system also helps for achieving the operational efficiency, as it concentrates on reducing the wastage and making the maximum utilization of all the available resources in the organization. It helps for gaining the efficiency in the organization. Now let us see what are the different types of internal control. So basically there are three main controlling techniques or the methods that are used by the management. One is preventive control, detective control, and corrective controls. So in preventive controls, as the name itself indicates, these are the methods and techniques that are used by the management or the internal control system in the organization, which prevent any kind of risk that may arise before it arises. So it can prevent any kind of operations or inefficiencies in the operations, or risks that may happen, or any kind of uncertainties that may happen. Say for example, in auditing, it will prevent any kind of errors and frauds that may happen before it actually happens. That means it stresses on the fact that prevention is better than cure. For example, it ensures that all the transactions are authorized before they are done, or all the transactions are recorded as per the accounting standards or other rules and regulations. So it puts in place, like it ensures that everything is in accordance to the rules and regulations. And these preventive controls are the proactive measures that are taken by the internal control system of the organization. Next, in detective controls, these are the tools or methods and techniques that are used by the management to detect any kind of frauds and errors that has happened. So they go on identifying or finding out why that error or fraud has happened by checking for the bank statements or the financial statements, supporting documents, vouchers. So here the detection process is done. So here the techniques and tools are used to detect a risk that has already happened. So detective controls are the reactive measures that are taken in order to identify why that error or fraud has happened. Then we have is corrective controls. So here these are the methods and tools that the management uses in order to correct a mistake. So here the error or fraud has already happened. So here they use certain methods and techniques to correct those errors or mistakes that have already happened. Say for example, the error of commission or the error of principal or the error of omission. In that case, the adjustment entries are made in order to make sure that that particular journal entry or the ledger entry is corrected. Then let us study the role of auditors in evaluating internal control of the organization. So it is the duty of the auditor to evaluate not only the frauds and errors of the financial reports but also to evaluate the internal control, because if the internal control of the organization is strong, there are less chances that errors and frauds may occur. Or else if the internal control system in the organization is weak, there are chances that, or the auditors will get to know that there may be frauds and errors that have happened in the financial reporting. So how the auditors can evaluate internal control effectively? They can first understand the internal control system. So the auditors, in order to evaluate the internal control system, first they need to understand what the organization is all about. So how is the internal control system of the organization is? What are the tools and techniques or the methods that are adopted by the management of that particular company? So that this understanding helps the auditors to assess what are the risk areas that they have to concentrate more, or it helps them to identify easily what are the areas or transactions in which there may be chances of frauds that may have happened. Next is assesses control risk. So here the control risk is that risk which has occurred due to the management or the internal control system's failure to detect such kind of risk or error in the financial statements. So the auditor has to assess for those kind of risk which the internal control system of the organization has failed to detect. Then by this way, the auditor can also assess what might be the control risk of the financial reporting. It again depends on the strength of the internal control system, or the advanced or the design or the methods that the internal control system of the organization uses. Then tests controls. So here the auditor can go for testing the controlling techniques that are used by the management. So if it is not strong, they can also recommend or suggest the management to improvise their internal control system. Then the auditor can adjust audit procedures based on the control evaluation. So once the auditor has done the evaluation of the internal control system in the organization, they'll come to know what are the areas they have to concentrate more. So if the internal control system of the organization is strong, they can give less time on seeing the transactions in the entire transaction in detail, because or else if the internal control system of the organization is weaker, they can dedicate much of the time for analyzing the risks involved, and especially those areas of risk where the errors and frauds may happen regularly. Say for example, the auditors may assess access control in companies' IT systems to ensure that only authorized persons have access to sensitive financial data. Hence, we can understand that the internal control system in the organization is a fundamental and important aspect in every organization, which not only ensure compliance with the rules and regulations but also helps for gaining operational efficiency and to reduce the frauds and errors that may happen in the financial reporting. Hope you all have understood about what is internal control and the role of auditors in internal control. Thank you.